We have a Fox Business exclusive right now. Terry Duffy is with me. He's chairman and president of the CME Group. He's joining me now for the hour. Terry, great to see you. Welcome.
Thanks, Marie. I appreciate being here, and I'm so happy for you being in your new digs here at Fox, and you look wonderful here on the set.
Thank you so much, Terry. I'm so happy to see you as well. So let's talk a little about these markets first, because I want to get into your business because you have big potential for big profits down the road once interest rates start moving up. So I want to talk about those interest rate products, but I also want to talk about regulation, because you're in a position to really see things change as a result of Dodd-Frank and some of the rulemaking going on. But let's start with the markets, because in your heart of hearts, I feel like you're a trader.
Well,
how does this market?
Many years, yeah.
Exactly. How do these markets feel to you?
You know, overall, the equity markets feel just kind of a nothing to me, Marie, to be honest with you. I think we're going to be up or down 5% for the year, and we're going to look at a non-event. So I'm not looking at any great shakes in the market. The market had such an overwhelming success last year, but what concerns me is top-line revenue is not there to support another 30% gain on these indexes. So you can't keep having stocks rally by cutting costs and increasing your multiples. So that's what we've seen a lot of over the last year, and we're going to have to wait and see. But I think revenues will be better than expected this year, but it doesn't mean the market has to rally with it.
Well, that's the thing. I mean, we're sort of seeing gains in this market on the anticipation that things are coming back. I looked at the profit numbers the other day, and I've been saying this: 8% profit growth year over year looks pretty good for the fourth quarter, but revenue doesn't compare to that.
No, I think revenue will be closer to 4 to 6% top line revenue.
Even lower, some people are looking
Well,
at.
they're going to look at 3% and 2% like we saw last year, but I think it'll be a little bit better than people anticipate, which will support the market overall.
So in a slow growth environment and a market that's sort of bumping along the bottom after that huge performance we saw last year, how does CME grow? What do you look at to really ensure that the company keeps growing and is in that growth mode the way you have been, even while the environment sort of stalls out?
Well, I think you have to look at our asset classes, Maria. We're the most diverse exchange in the world, and I think when you're sitting at a situation like we are today with equity prices at all-time highs, you have interest rates at all-time lows, you have metals kind of sitting in limbo right now. These are all products that we trade. They're not going to sit in those particular situations for very long. People need to hedge and risk those liabilities that they have on their balance sheets, and that's exactly what CME is there to provide for them at the most cost-effective way with the deepest pools of liquidity. That's what we do day in and day out, and I think it's going to be an active year for us to do that.
What are you looking at in terms of the gold market? You had some real opinions last time you guys spoke at the end of last year.
I thought gold was overpriced at $18.50.
What a call that was. You were like, sell gold right now. You told me.
We got lucky. We get lucky once in a while. But looking at gold this year, I actually think that the gold market price, just high 12s, low 13s is probably a fair price for it. I would be a little bit nervous to be short the market in these levels. I think that people will be looking at the equity markets, and if they don't perform well, they're just going to automatically buy gold because the equities aren't performing. So I think gold could have a little bit of a run up back, 14, 1500, somewhere in that area.
Okay, so you're on the buy side now there. What are you looking at in terms of consolidation? I mean, all your competitors around you consolidating, getting together. I know there's some deals happening in Asia. Do you need to do a deal? Are you going to team up with Deutsche Börse?
Well, the good news is my competitors are consolidating. I actually did this a long time ago. We did this, as you know, in 07 and 08. We did two of the biggest transactions in the United States by putting the Chicago Board of Trade and New York Mercantile Exchange under CME's group in those 2 years, so $22 billion of M&A activity. So we were quite active while other folks were not doing so. So now I think they're paying a bit of a premium for some of the transactions they're doing, and they're trying to play catch up.
Are things getting expensive out there?
Yeah, a little bit. People are paying up a little bit for very few assets. You look at around our world, there's not too many exchanges left. There has been a tremendous amount of consolidation. Europe is now going to be under the Life brand with the ICE, with the NYSE components.
Right,
so
sure.
That's what we're going to see.
Do you worry that ICE is going to try to get in on your key, dollar interest rate business? Is ICE going to try to take market share in that? I mean, this is such a successful business for you.
Yeah, we're very cost effective, Maria, and we have so many other values. When you trade our interest rate products, when you trade other products, you get portfolio margining, things of that, because of, as I said earlier, the vast amount of asset classes that we have at CME Group. So that benefits a lot to the end participant. So it's very difficult to move that liquidity, especially when it's being done so efficiently.
Mm-hmm. When we saw a move in the 10-year last year up to 2.5, it was at 1. That was a really good quarter for you. I'm just wondering how sensitive your company is to moves in interest rates.
It is sensitive. There's no question about it. It's our biggest product line, but our other asset classes have also gained. So You look at our energy business, you know, we have 31 million contracts open in energy, and when we bought that, the New York Mercantile Exchange, we had a lot less than that. So that business has grown for us, and it's good margin business, and we're seeing a tremendous amount of volatility, as we all know, in natural gas because of the polar vortex that came in late last year, and that has really put a tremendous amount of fluctuation into that marketplace. So that has been good for us. So even when our interest rates aren't trading as much as they historically would, the other asset classes are picking up the slack.
Yeah, I want to talk about interest rate products and what your feeling is around rates and the tapering, but we'll get to that later because, of course, Janet Yellen is testifying in Washington today. What about bitcoins? Would you list bitcoins on the exchange?
You know, I'll be honest with you. We are doing a little bit of work looking at them, and I'll say a little bit of work, and that's it. First of all, they are backed up by nothing. They're not backed up by the faith of any government around the world, and some could argue that currencies around the world aren't backed up by their governments either, but I personally believe they are. So we have to take a look at this. I think there's a little bit of misdirectives along with bitcoins and how they actually work and how you have to exchange for cash for these bitcoins and who accepts them and how do they accept them. So it'll be interesting to see how that goes. I think now that there's a potential cash settled index going to the bitcoins that was developed by a couple young men, it'll be interesting to see how that pricing mechanism kicks in and if it adds some stability to the overall market, because you can't trade at $1,200 a Bitcoin one day and $500 the next day.
Exactly.
You know, it just doesn't work. Investors will not participate in that, but it's in its infancy right now. And you never say never, so you keep a watch on these things.
Well, it's almost like, okay, so everyone's talking about bitcoins. I sort of have to look, but I don't believe this.
Yeah, right. It's kind of hard. It's hard to really believe in these virtual currencies. You know, virtual currency would be gold. Gold's a virtual currency, Maria, because gold is not backed by the full faith of anybody, but yet it's a precious metal that was used historically for currency. So, well, why would Bitcoin be the currency of choice if the dollar is not? Why not just use a precious metal instead? One of the reasons I kind of like gold a little bit right now.
That's a great analysis, Terry. All right, lots with Terry Duffy for the rest of the hour. Thanks very much for that,
Thanks,
Terry. Let's get a quick look. Meanwhile, though.